Alright, boys and girls. I see Jenny in the room. I see a few in the room actually. It's a public holiday here in Australia. So I only did a half day of work today, so I'm not fully up to date with what's going on. I mean, look, I know what happened, but let's just say that usually I'm more prepared. Now the main thing that everyone's talking about is, what's going on with the pound. Why is it opening up lower? It was a question I got asked by clients a lot. And, what's the target on downside? Now, the market has been surprisingly fickle, right? Now, if we'd come into today and there hadn't been any UK news over the weekend and we're above 130 still, and that PMI data that just came out, all right, we were talking about that PMI data for the last week or 2 weeks, how it started the huge rally last month, and that this month is very important, especially for the BOE's easing intentions this year, whether or not it does come out strong. And we'll take the services PMI as indication we'll take the manufacturing PMI as an indication of the construction and the services PMI. Now, that's great, right? That's all good in theory. If we were above 130 and things were stable, then we could be much more aggressive in the longs. Now, don't get me wrong, I'm very happy that that number came out strong, because I'm a pound bull. In general, I'm looking for the recovery trade, and for reasons to get involved in that. It's just very hard to get aggressive when the market's under so much pressure, and we're so close to 128, which is the Brexit low. Now, why are we under pressure today? It's mostly to do with the UK Prime Minister saying that they're going to push forward with Brexit, the formal invoking Article 50 by March 2017 at latest. Now, I'm not sure what the market was expecting here. I don't know why it's ultra negative. I mean, in one regards, you're getting more certainty, right? But what the market's taking it as, I think, is still some people fully hadn't committed to Brexit as happening. And second, now they're focused more on just the uncertainty of what the negotiation is going to bring. But we're actually closer to the end than we were on Friday. So, once you do have certainty, that's really important for the pound to start to recover. So the certainty really is what we're talking about, is the sort of trade deal that UK and Europe is going to have. That's going to make headlines for the next couple of months, with potential members of EU playing hardball, trying to stop any sort of other members from the European Union leaving, and also some sort of punishment just generally for the UK leaving, and other EU members wanting the UK to allow their workers to come and be migrant workers there. So Poland, for example, is going to be pushing very hard not for its citizens to be treated as any sort of second-class citizen over there. And in return, the UK, what it wants is to have access to the European Union banking sector, right? To be basically the big dog in Europe in terms of banking, and to have this free transit of money. That's what they really want. They want the status quo to continue in the financial services industry, because really that's like their biggest thing. And if they can get that without with some sort of appeasement for the immigration problems that the UK have got, then that's going to be a very nice outcome, and the market will obviously rally. If they can't come to an agreement, or they're too aggressive when they're negotiating with each other, then the chances of a hard Brexit, where there's a leaving the EU without a deal, is more likely. But I think we don't go down that route until there's some sort of indication that's going to be happening. So we're relatively low here in the we're low from every perspective on pound, right? So apart from momentum trading and trend following, there's no reason to be short here. We're much closer to that 128 than we were on Friday, and this is dangerous levels. Okay, to be short. In terms of buying, though, yeah, I think you would want to see some sort of concrete market reaction follow through on the pound before you get too aggressive in sort of buying. So if you don't trade the pound much, to make it simple, in a couple of days, if we're above 130, we can talk about buying. Okay, and the market's given it a pass on the UK Brexit talk. Might get fatigue from selling on that same issue. But in terms of if you don't trade the pound much and you want to just buy because that data came out strong and we're cheap, yeah, look, it might work out for you. But it's also, we're pretty close to some juicy stops below 128, and so you're fighting a little bit of market logic there. Yeah, so even if we're going up, and you got to think about it. If bigger players have different timelines than what you day trading mindset might think is appropriate. So yeah, we could be going to 140, but we can be going to 125 first, right? And bigger buyers, people who are really good traders, could be buying the pound here, but have intentions of buying more lower. You know what I mean? So it's like, if you're trading off the 15-minute or the 1 hour chart and you're trading with 30-40 pip stops and you're thinking the game's rigged, it is a little bit harder than that sometimes, especially on a pair like this. I'm not going to stop you buying pound here, but just be aware that we are close, and we are close to some big levels, and the market likes to test big levels. What are you cats doing anyway? Selling pound, yeah, magician. Oh, Jesus. What are you cats doing anyway? We might have a look at a couple of the trade suggestions that are put in. We're not going to do a big one today. Like I said, it is a public holiday over here in Australia. Oh, Jenny. Stop teaching people to hedge. I mean, look, the issue with the hedge trading is it takes remarkable amounts of capital. Yeah, and the ability to close losing trades. Now, that's something that the normal trader can't handle. And also, the slippage on sell stops and buy stops would drive me nuts if that was the method I was using. So yeah, I mean, if you've got 10,000, you're trading 0.1, then you can trade this sort of style that Jenny's talking about, where you basically don't take losses, you just keep on adding to shorts, or keep on adding to longs as the market moves, trying to basically create a long and short portfolio that is positive. And that way you sort of take out the bias in trading. You don't care which way it goes as long as it moves. And you are quick enough with the change in sentiment indicators that you'll make money. It's extremely hard. She's being modest. Her and Shuru, I think, are quite good traders. It's not easy to replicate, that's for sure. I don't know about that trend line. It is huge news in terms of framing market perceptions of the next two pieces of news, and also, the narrative of the Bank of England is going to be able to use. But it came at a bad time, which I think is why you don't have the big reaction just yet. I mean, what I was just talking about there, being hesitant to get long, is because we're too close to 128. Alright, selling dollar Mexican. Looks like Trump is imploding a little bit. So yeah, that trade, we have a fair bit of that from last week. And dollar Mexican is doing okay. Actually, it's doing quite well, but we still got a substantial room to move. Yeah, it's not like this trade is one and done. And this is already like 300 or 400 pips in normal world. So we're talking big moving pair here. We want it to move down like a 5% move. Sorry, that's a 4% move so far, so it's 400 pips in Aussie US world. We're still targeting that 17.5-ish sort of level. And probably people are gonna hop on that trade as it becomes a bit more apparent. The other trade that we have is short Kiwi. I mean, you can go long Aussie Kiwi as well. Long Aussie Kiwi is back above 105. People are excited about that because technically now we've got some substance behind this move. Yeah, it's nice, which is okay. But yeah, I mean, Aussie and the Kiwi are doing quite nicely just generally. So yeah, I'm not 100% in the bear camp here. I might be stopped out in this trade. Kiwi's relentless. And then we've still got the long-term Euro Pound short. Now, I'm pretty close to adding to Euro Pound. I just want to see how we go today. If we do break 128, then that's fine. But this is great selling levels. If we somehow get even worse and we break 128, then 90's on the cards. So 90 is the magic number. Then you'd get that if 125 on the majors come through. No, it's near a fire station, mate. Near fire station here in Sydney. If you know Sydney, I'm near Central Station. So Central's got that big, that huge firehouse. Yeah, I come from downtown Chicago, man. No, there is no crime in Australia. Okay, you got a few homeless people stealing, shoplifting, that's about it. Divergence between the euro and the pound, yeah, I mean, that's going to be huge next year. I mean, somehow the euro pound's falling back to 80. So yeah, of course, when you have French news and French, national elections and stuff, you're definitely going to get some significant euro focus rather than just straight up Brexit focus. And if any other countries look to leave the European Union, that's euro negative, not pound negative. And that's going to be its theme in 2017, surely. It's not like the rise of nationalism and right-wing anti-immigration sentiment is going to go away. If anything, it's going to get, bigger. And if the UK doesn't implode, then it's going to embolden some of the other nationalists to, French, Italian. Who else has got elections? Netherlands, I think, has got some elections. What, Dave? No, Dave, don't play things just because we talk about them. You get involved in everything, mate. Just stick with your Aussie Kiwi longs and make money on that. Do not play Deutsche Bank. Deutsche Bank, Jesus. Oh, because, basically it rallied 15% on a rumour, and, other banks are now saying it's fine. I don't believe any of that. There's no way in the world I'm touching it. I'm not, one day rally does not make it. Yeah, I wouldn't be buying this on the slide back down to 12. Yeah, no, it's super dangerous, mate. Super dangerous. You'd be sitting there when it's at 8 going, why am I in this? What's this emergency bailout ECB meeting we're talking about? Yeah, the boys club, they're not going to let a big bank fall. Probably saying the same stuff about Lehman. Don't make me go get our little rant there. Is it time for Dick Foold's rant again? You gotta find it for me, Potter. I don't know what right thing to say. Here we go.
In equal measure.
Dick took the floor like a statesman, and he proceeded to deliver this fearsome attack on short sellers, the people who were depressing Lehman share price by being short the stock. And he, rather to everyone's surprise and mystification, he said,
If we get this right today, Bubble will squeeze some of those shorts. Squeeze them hard. Not that I want to hurt them. Don't get that, please, because that's just not who I am. I'm soft, I'm lovable. But what I really want to do is I want to reach in, rip out their heart, and eat it before they die.
Dick Ford also had an...
Yeah, that's classic Potter. I'm gonna keep that in the bank, mate. That's as good as the South Park, and it's gone. Little skid. Yeah, gold's getting pumped with the pullback in risk aversion. It's probably going to break 1300 here. I'm pretty bearish on gold. I was surprised we didn't break 1300 on the last attempt. Pre-game a few weeks ago, and you know I'll be surprised if 1300 holds. Just feels to me that the easiest path is down at the moment, and that most of the retail crowd is buying dips, and that's just asking for trouble. A bit of a clean out. Now I don't know if it's going to be a real break of 1300, so it might be a false break. Just go down 1280, 1290, then come back down up into range for a couple days later. Right, that's really mess with the heads, but yeah, I understand, especially as we get closer to December rate hike, that gold's going to be struggling. What you needed for gold to rally was risk aversion and Deutsche Bank collapsing, which you never know. In 2 days might be the theme again, because this market's changing direction every couple of days. I don't know about euro, right? I'm not trading the euro. I haven't traded the euro for months. It is literally the most boring pair in the market. That's just disgustingly lack of movement. That's a daily chart, guys. That's a daily chart. You gotta be kidding me. Well, let's go back to the day. Just back to the day. Alright, look at the sort of day, the weekly moves you'd get. You know, we'd get a range here, 128 up to 140 over a couple of months, and back down again. Now it's like this 200 point range. It's building up for something. It's building up for something. But yeah, I'm not too keen either way. Alright, so I think just for the rain of the day, keep an eye on both stock market sentiment and the pound. I understand the pound's weakness, but I don't believe it. So I'm bullish, but it's not an endorsement to start buying it unless you want to go to war. Just be patient with that particular pair. You can buy a little bit, right? Just buy half or something. Half of your normal size. In terms of data as well, this week's huge. So we'll go into a bit more depth tomorrow. We've got the RBA tomorrow. Now, RBA tomorrow is pretty important for the Aussie Kiwi. We'll finish up on this. The RBA is expected to go to a more neutral footing, and that's with the new governor. It's basically slowing down market expectations of another rate cut. So most banks here are suggesting we're going to be in hold. So this is the big four banks, which are pretty good at sort of RBA sort of forecasting, suggest we're going to be in hold at 1.5% for the next year to 2 years, and then gradually start to raise rates. But yeah, right now we're talking about the RBA coming to the market's view, and if they do that, then that's a pretty big Aussie rally, sort of, especially on the crosses. So look, if he remains dovish, if he remains accommodative, if he remains opening the door to rate cuts further, then Aussie will have actually quite a large reaction tomorrow to the downside, because that would be far from the market expectation and the new sort of norm. So yeah, that would throw a spanner in the Aussie Kiwi rally, that's for sure. Right, if there's any other questions, guys, I'll probably answer them tomorrow. Like I said, it's popular here, so we're not going to do too much. Now, mate, that's the there's a visual representation of the pound chart going on outside, mate. That's the sounds. There's a huge fire in London, and there's all these fire trucks just going there to put it out. Alright, I'll be back tomorrow. So it's a little bit later here for Australia. It's 8 o'clock for the 9 GMT, but we'll continue with the 9 GMT. I think it's a good time slot. And send me a little PM if you want me to have a go. No, I'm not in London, man. I'm in Sydney. And good luck with your shorts, magician. Jesus. Because there's nothing more dangerous than that stock market rallying, selling pound yen. So yeah, back 9 GMT. So it's still the same for everyone else around the world, just for Australia it's a bit later.